The wealthy aren't working regular jobs trading their time for money. No, they're busy building empires that they can pass on to their kids' kids' kids. Almost 90% of all millionaires got their wealth through real estate, and while many people focus on the stock market or saving money in the bank, the big players are snapping up real estate everywhere. And guess what? These properties increase in value over time, giving them assets that they can pass down for generations. I'm Will, and I teach people about investing, personal finance, and money. I've walked the path you seek, and today I have several businesses and investments that provide me income every single month, meaning I never have to work another day in my life. If you plan on becoming financially free, be sure to subscribe to the channel and hit the like button if you find this video valuable. Okay, so how do the rich use real estate to build their wealth? The first strategy is real estate syndications. This is a top-tier strategy for the rich to create generational wealth. It is like a team effort in property investment. In this, a group of investors pool their money together to buy a big property, usually a commercial space or an apartment complex. There's a team leader called the general partner who handles all the hard work. The investors or limited partners chip in with the funds. All investments come with some risk, but syndications are pretty popular because they often give back solid returns, and pretty quickly too. For instance, you might see an 8% return for 5 years, plus a 50% boost on what you originally put in at the end of the term. That means your investment could almost double in just 5 years. The general partner uses the pooled money to fix up and improve the building. These upgrades allow them to charge higher rents. Since the value of commercial properties is tied to rent prices, higher rents mean the property is then worth more. Generally, after around 5 years, most syndications aim to sell off the renovated building for a tidy profit. As an investor, you'd get a cut of both the rental income and the sale. So investing in a real estate syndication is a very smart strategy the rich use, because they don't need all their own capital, and if things go as planned, the upside can be huge. Moving on to the second way the rich use real estate for building wealth: investing in multifamily properties. The rich know multifamily real estate is a great investment, and it's estimated to cover around 20% of the rental market in the U.S. Now, you don't necessarily need to join a syndication for this. Depending on your budget, you can dive into multifamily real estate all by yourself. When I say multifamily properties, I am talking about buildings with more than 4 units. The cool thing is, you can often find these types of buildings at reasonable prices. And there are some big advantages to owning multifamily homes compared to single-family ones. The biggest perk is the cash flow. With a single-family property, if your tenant leaves, your cash flow takes a nosedive because there's no rent coming in. But with a multifamily property, it's a different story. Even if one tenant leaves, you've still got others paying rent, so your cash flow stays more consistent. When one tenant moves out, others are still there, and new ones can move in. Multifamily properties are a smarter choice for building generational wealth. Just owning a couple of these apartment buildings can set you up, and even future generations, with a steady stream of passive income. The next strategy is investing in REITs, or real estate investment trusts. This is a bit different, but super interesting. So what's a REIT? It's basically a company that owns and often manages properties that bring in money like office buildings or malls. The cool part? REITs are traded on big stock exchanges just like other stocks. When you invest in an REIT, you're buying shares in a company that owns real estate, but you don't own the actual property. The rich dump billions into REITs every single year, and they will continue to do so forever, simply because REITs give the great returns of real estate investment without the need for ownership of the actual property. The rich love passive income, and REITs provide plenty. However, the great thing is, they're not just reserved for the rich. The thing is, the money you make from REITs isn't quite the same as what you'd get from syndications. Remember, with syndications, your returns come from both the rental income and the sale of the property, which can be pretty high. REITs, on the other hand, are more like regular stocks in the way they pay out. But there's still a fantastic way to spread your investments across different types of real estate, especially as you start growing your wealth. In short, REITs let you dive into real estate without buying the property yourself, and they're pretty easy to get into. Plus, they're a smart move for diversifying your portfolio. Next up, the BRRRR method. BRRRR stands for Buy, Rehab, Rent, Refinance, Repeat. This is probably one of my favorite strategies for building long-term wealth because you can get properties for free. Yes, free. Here's how a typical BRRRR investment plays out. First, you find a property that needs a full renovation, usually something that is in very poor condition. The rich don't get emotional here. They look for the worst house on the best street. The reason you want the worst house is so you can get a great deal. Once you've got the property, you roll up your sleeves and start the rehab. The more you can do yourself, the more money you save, but if the numbers work, it'll be easier to get a reputable construction company in to do the renovation. After fixing it up, you find a tenant and rent it out. Now, once it's rented, you refinance the property. This means you get a new mortgage, usually at the current market value thanks to your renovations. So for simple math, let's say you buy a house for $100,000 and spend $50,000 fixing it up. Once complete, let's say other houses in that area are selling for $220,000. When you refinance, the bank might give you an 80% loan on the house, which means you get $176,000. This means you actually get back your initial $150,000 total investment and made an extra $26,000. The money you get from this can be used as a down payment for your next property, and then you repeat the whole process. The BRRRR method is a fantastic way to build up a real estate portfolio step by step. The rich are constantly improving properties, increasing their value, and using that value to expand their investments. If you're enjoying this video so far, go ahead and smash that like button. Moving forward, next strategy is using real estate as an inflation hedge. This is a neat trick the wealthy use. Real estate as an inflation hedge. When inflation is climbing, everything seems to get more expensive, right? Well, cash starts losing its value, but real estate plays a different game. Real estate is like a guard against inflation. Over time, it's likely to maintain its value or even become more valuable, even when everything else is getting pricier. Unlike cash, which can lose its worth from year to year, the value of real estate tends to move upwards with inflation, or sometimes it even outpaces it. It's not just about what the property looks like or where it is, it's about how it stands strong against the rising tide of inflation. Strategy number 6 the rich use is take advantage of real estate's flexibility. Real estate isn't just a one-trick pony, it's super versatile. A house can be so much more than just a family home. You've got options galore. You can turn a property into a short-term rental, like for vacation stays, or go the long-term route with tenants. And then there's flipping, buying a place, sprucing it up, and selling it for a profit. While flipping is often seen as a short-term strategy, it's still a solid way to make a quick profit. So in wealth building, real estate isn't just about buying a piece of land or a building. It's about creatively leveraging its many uses to make money, whether that's through renting, selling, or just holding on to it as a shield against inflation. The rich understand this, and that's how they use real estate to keep their wealth growing. Finally, the last strategy is using leverage to maximize wealth building. Leverage in real estate is like using a magic wand to amplify your investment power. Here's how it works. Say you've got $30,000. If you put that into the stock market, sure, you could make a pretty penny. Like if you had invested it during the big dip in March 2020, you might have doubled your money thanks to the market bounce back. But with real estate, that $30,000 can be used as a down payment on a $200,000 house. Now, if that property's value goes up 20% to $240,000, you're not just making 20% on your $30,000, you're making it on the entire $200,000. That's $70,000 in equity compared to the $28,500 you might have made in stocks. That's the power of leveraging in real estate. This is the big one, and the rich understand this inside and out. For every dollar they invest in real estate, they can buy something worth $4. No brainer. Real estate can be a great investment if you know what you're doing. All the strategies mentioned have the power to put you into a different wealth bracket. If you're interested in building wealth fast, the best time to do so is in a recession. Watch this video next on what to invest in.